Hey there everyone, welcome back to the Indus YouTube channel. In this video, we're going to discuss about different trading styles using futures. So this is our third video of our free option course. If you have not yet watched two videos before, I highly recommend you to watch that video. And coming to, if you click on playlist here, you can see a free option course playlist, and we're going to make all the videos in this playlist. So by the time you are watching this video, might be other videos might also be uploaded, so don't forget to check out this playlist. And without wasting our time, let's get started. Yes guys, welcome back. These are the list of trading styles we can do with the futures. We have other list also, but these are the lists which are very close to our trading. So I have shortlisted the 7 styles of trading which we use our day-to-day life, rather we can say which a trader or investor can do these styles of trading using the future. So coming to the first style, that is hedging, we all already discussed in our second video. In the second video, we in detail explained about hedging along with the examples, like 2 or 3 examples. We have taken real-time example, and also we have taken Reliance as the example, and we have discussed in detail about this. But so I'm skipping it here. I don't want to repeat the same things over and over again. If you have still doubt, you can go out and check out in the second video. Now coming to second, long-term investments. Like when I am learning futures, when I am new to futures, I used to think like, can we also invest in long term using futures, because their leverage, we get lot of leverage. So might be you also have the same doubt. Yes, I'm going to explain that, but you have to decide whether it's good or not. So let's open our chart. So yes guys, this is Reliance spot chart and this is Reliance future chart. Okay, now spot price it's around 2434 and the future price is somewhere 2442. So let's say we are planning to invest in Reliance in futures. Why we are going to futures, we already discussed in the previous videos. There might be lot of reasons why futures are giving. Among them, the most common reason we see why people come to futures is for leverage. Why? Let's say we are buying 250 shares, because why 250? The lot size of Reliance is 250 and I want to invest. Okay, so if you see, we required around 6,09,000. Let's say for easy calculation purpose, we can say 6,10,000 around. But when you come to futures, you required only 1,19,000. You can see around it's like four times, or nearly more than 4 times. Okay, we are getting the leverage in the futures. So this is the main reason a lot of people come for future trading. So now for simple trading it's okay, but can we invest in futures? So let's see. Okay guys, now let's discuss about what happens if we invest in futures. So let's say we are invested in the futures and spot price came down on 28th September 2023, that is September expiry, but you are still very strong on the Reliance. That's the reason you are thinking to invest in the Reliance, right? So what is the only option you have here? The first thing, you have to exit from this contract, that is for sure, because we know what happens if we hold till the expiry. We have discussed in the second video. And what is the options you have? The first option I have is I will sell the contracts here and I will buy in the spot for the long term. But here the question is, we do not have that much margin here. So what is the other option you have? The other option you have is you can go for the next month contract, next month future contracts. Already we have covered the basics, so what should we say? Next, this is near, next, and far month contracts, right? Let's use the terminology already we covered in the previous videos. So here From near contract, you have to exit your contract and you have to move to the next contract. So moving from one contract to other contract is called as rollover. In our stock market terminology, we call it as rollover. Okay, let's say again the same repeats in the October month. Again you will roll over to November month. Whether it's profits or loss, you should move to the next expiry, the coming expiry, irrespective of your loss or profit. Okay, so what is the main concern we have here? It depends upon person to person. Okay, like if we invest in spot, no one is going to stop whether you exit at September, October, November, because we are paying one time charges. And most of the brokers nowadays, they don't even take the brokerage on equity delivery. And yes, even after we have to give some taxes, that's the other concern, but it's all the charges are one time charges. But coming to futures, when you are moving from one contract to other, you are exposed to rollover charges. You have to give the rollover charges. This is the first concern we have in investing in futures. And I'm going to also discuss about the second concern. Let's go. Yes, we opened NSE website, and if you clearly see, this is the last closing price. Okay, let's say you are planning to make a rollover from September to October. Okay, if you see from September to October, it is almost, if you see, 2442 minus 2458, it's almost near to 16 rupees. That means along with rollover charges, you are also exposed to the rollover cost. That means, let's say you are already also giving the charges for exiting the present contract and buying the next contract. You are giving the taxes or charges. It's called as rollover charges. And also if you are going for the next contract like 2442 and you are selling at this price, and again you are buying at a higher 16 rupees higher price, 2458, that means you are exposing to rollover cost as well as rollover charges. So it depends upon person to person whether it's the small problem or big problem. So I hope you understood what are the concerns we have. Coming to profits, or like coming to advantage part is the leverage part, as I already said you, and that is the main reason people go for it. Now I want you guys to comment below if you want to invest in long term. Is it a good idea to use futures or spot price? What you prefer? I want you guys to comment below. So now let's move to the another trading style, that is short term investments. Yes guys, as I said, you can go for short term investments and you can go for swing investments, as well as you could go for intraday trading. Almost this up to starting from here to here, everything is same. But if you see, we exposed to rollover cost and rollover charges in the long term. Similarly, we may also expose in the short term, not much frequent than long term. If you see, the changing of rollovers are less in the short term compared to the long term, and sometimes, especially in the swing trading, there are no rollovers at all. You take one entry and you exit once. A lot of time it happens in the swing trading. So especially these both short term and long term, we are exposed to the rollover charges and costs in both these trading styles. But coming to swing and intraday, we can directly go for it. We have extra edge of leverage. But the most important thing, which we have discussed in the previous video, you have to know how to use the futures using the leverage. Okay, you should not take over leverage. Let's say in the example we have discussed, Sai and Ram went for uh, 5 lots using the leverage, he exposed to a huge loss. So here you have to know how to use it. Once you know it, then swing trading and intraday trading futures is the best way to use or capitalize that move by using less leverage, okay, by using less capital. So almost we covered hedging, long term, short term, swing, and intraday. Now coming to short positions. And guys, the important notice here is short positions. What are short positions? Like, let's say if you want, you are expecting Reliance may fall tomorrow or in coming sessions. In equity, you cannot directly go and short. So for that, we go for short position. And again, we're going to discuss that with the example. Yes, again, go back to our, again, let's get back to our NSE side. And let's say if you are going for rollover in short positions, it's going to be your advantage. Why? The reason is 2442 you will exit and you will take the fresh entry in the rollover at 2458. That means if your view is correct, you are in an edge of 18 rupees more. For short positions, it's going to be an advantage. Rollover cost going to be an advantage in the short positions. Yes, guys, if future price is trading higher than the spot price, then we call it as futures are trading at premium. And let's say futures are trading lower price, that means less price compared to the spot price, then we call it as futures are trading at discount price. We have discussed about also short position. Now coming to arbitrage trading, even in the yesterday's video we have discussed about it, but today's video we're going to discuss along with the examples. Yes guys, let's discuss about arbitrage. It looks like a complex subject, but it's very easy if you understand once. Very simple. Let's say Reliance is trading at 100 rupees in NSE and Reliance is trading at 105 in BSE. So now immediately you will go and buy an NSE at 100 rupees and you will sell at 105 in Reliance BSE. So the difference, whatever the difference you are getting, that will be your profit. Okay, so this is one style, and especially this style we use in the cryptocurrency because there are a lot of exchanges we see, and sometimes due to high demand and high supply we see this arbitrage difference, the basis difference between these both, because the stock is same whether it's in NSE or BSE, but might be in BSE we are getting high demand, it is more to 105, NSE is at 100. But at the end of the time, we already seen the future formula, it similarly applies to the exchanges also. At the end of the day or like end of the month, they will again trade at the same value. So we capture this difference and we earn this difference. Okay, so you will understand once we go with the future example. Let's say Reliance spot is at 100. Okay, and again I am taking these prices only for easy calculation. Okay, as you all know where the Reliance is trading at, if you see 2434, but for easy example purpose I am taking this. If you see Reliance spot, let's say it's at 100 rupees and Reliance future is at 110. So now let's say when you have Reliance spot at 100 and Reliance future at 110, usually we don't see this much difference, but for example purpose I already saying you buy Reliance spot and you will sell one lot in the future. Okay, we're going to also see along with the calculations, and on expiry day, let's say the Reliance spot and future, as we already know, we have seen the formula of future price when F is equals to S on expiry day. Okay, so let's say both became 90, and now if you see in the spot price you have bought at 100 but it's trading at 90 now, that means you are in 10 points loss. But coming to future, you have sold the future at 110 rupees but now it is trading at 90, so you have 20 rupees profit. So 20 minus 10 is equals to 10, right? Hope you understand. Whatever the scenario, it's like just like the hedging concept, but in the hedging concept we just make sure we protect our gains and we don't expose to much loss. But in the here arbitrage, the difference, if you see the difference irrespective of the market closing, it might close at 150 also, you will earn only 10 rupees, 10 points difference. Whether it's expired day where the price expires on 70 or 60, still you earn the only this difference price. If you want, you can also calculate it. So this is arbitrage. Now how to find this arbitrage difference? We have lot of examples, like you can see in the money control you have this difference, and you no need to worry about that because we're going to also make a separate video on this in the regular earning strategy. So in the coming sessions we have a different, and altogether we have a separate strategy for that as well. So almost we have covered a basics of futures. Okay, now one more important thing which I want to cover here is almost we started this series with why future market when we already have equity market. Yes, right? We have explained everything from there, and again we are back to this example. As what I said, 45 is the price, this both guys are agreed to sell. Okay, now let's say suddenly in case 1, okay, this is case 1 and we're going to also take case 2. Let's say the price is moving to 90 in case 1 kg rice on December 15 became 90. So how much loss the farmer, rather I correct my statement, how much profit he missed? 90 minus 45, right? 90 minus 45. So how much he is losing extra? Around 45, right? So here how much the wholesaler is making profit? He is making 45 rupees profit extra because he is buying 45 rupees kg from the farmer. So farmer is losing 45 and wholesaler is gaining 45. Let's go for scenario 3 and scenario 4 or case 4. Yeah, case 3. Okay, like in case 3, let's say price moved to 20 rupees. So how much in the gain for the farmer? What is the gain? He sold at 45 but the price is at 20, so you almost gained 25 rupees. In the similar case, wholesaler lost 25 rupees. But if you see, coming to the futures, both are obligated. Okay, obligated in the sense, whatever the price, this both guys, farmers should exchange the contract with the wholesaler, vice versa. So here in the futures, there is one thing which you have to observe is the contract should be exercised at the expiry, whether it's loss or profit to the parties. So here in the futures, there is high probability that one person is going to take the loss, whether it's big or small. Okay, the other person is gaining the profit, that's not the matter. But here the important point, both are obligated to exchange the contract, and one person gonna to take the loss. So we're going to also discuss about this in the next video, because next video mostly we're going to start the option basics. There we're going to clearly discuss from the starting point, from the scratch we're going to start our options. That is why option market when we already have equity and future market. So from that point we're going to start our option series, because futures are very important to learn the options. And if you have understood the futures, till to date, like till the three parts, if you understand it well, then we can, like, option series is going to be a cakewalk for you. Okay, like if you still have doubts about the features, hopefully I have covered everything in this basics, but still there is a probability that I may miss some concept or like some points. Whatever you feel, comment me below. So as of now we have very less subscribers, that's the reason the comments may come slow, but once I feel there is enough comments, then I make a Q&A session on that, so all other doubts also get solved. And the one more point which I want help from you guys is, like, if someone asks comment in the comment section, if you know the answer, try to help others. So which is like win-to-win situations. Everyone in our community should respect to others and try to educate each other. And whatever the point, if you feel this point should have added in this future basics, then let me know, so that I will try to make another video as Q&A. Okay, I hope you understood this video. And one more thing, this is our Telegram channel where I share all important small updates. Like if you see, here I have shared some morning commentary, and as well as I shared some important label here. So, and also I share a lot of other things as well, like the YouTube links, and also I share some important chat patterns and important concepts, whatever I feel. So I explain important levels and important whatever the news we feel I should share with you guys. This is the means of contact for short information. It's like for an important level I cannot make the videos, right? So that's where you have to just follow. And coming to, this is our premium channel, I share here some swing shares as well as swing calls for educational purpose. We also take live sessions for this, guys. In order to join this channel, just you have to open one Demat account using our links. Thereafter, if you share the details to this following number, then you will be added to the premium group. Okay, so for this video, that's it, guys. See you in the next very important video, that is basics to options. Until then, this is Krishna signing off.
Fearless.